What is going on, guys? Welcome on into today's stream. We are live for Power Hour about 15 minutes later than usual, but hey, we're gonna hang it out. Gonna be hanging out, and we're gonna see how this baby goes. Tesla is the stock of the day, I think, here today across the large cap space. I mean, you're looking at this thing, huge gap up, and essentially never looked back. You know, opened up the day like right up here at like 202, closed last week 196, 197, and now it's sitting at 208. Monster move there on Tesla again. By far and away the strongest of the heavyweights in the S&P, for sure. So that's one to watch. You know, you even have a push. Maybe I'm putting higher lows here this afternoon. We're above VWAP. You got higher lows. You know, building right now. It does look pretty decent. It's been it was where I had a trade on Tesla today. It was the one winner. Essentially, was break even, maybe up or down like a few bucks. Tesla was the one. I had IWM, but I ended up getting bent over on it because here's IWM. I essentially had this thing for, let me get rid of this white box. It's just annoying. I had this guy as she was breaking down below these lows right here. So we had lows in the morning, okay, came back, retested it back here. My light just kind of wonked out. And then broke below, got stopped, and then whatever, it chopped around for a bit. Eventually we got the move down that I was looking for. Clearly weaker. Well, I guess not really. But was looking weak compared to like a Tesla and whatnot. So I was, had the idea, just it stopped me out on that move. And then, that's kind of been the chop, way of the past couple of weeks. I'm not super surprised, keeping the risk dialed in. It's not like that's getting destroyed, by this type of stuff. But, kind of annoying though, to say the least. Because when you look back and you're like, oh man, I had the idea, but whatever. Stopped, stops are in there for a reason because, for all the times that, you look back and say, well, if I just held a little bit longer, I would have been, really green. There's a million other situations where it would just go completely against you and you would have lost, a ton more. And so you got to have them in place. But I think that was a flaw of probably playing the short side on such a strong early day. I know we've come back a bit, but like it's just been a generally stronger day. And then now I guess stuff's kind of bleeding a little bit, but maybe that was the mistake on that idea. So I don't know. We'll see. Thoughts on BTC? Let's look at it. So the way I've been looking at Bitcoin is this, is from a more of a swing perspective. So here's the chart of the past over the past like 2 years. And if you throw up this indicator that I picked up from Lux Algo, it's two indicators. It's two. So I pulled this up. I thought this is a really interesting strategy to kind of look at. So it's essentially just the trend tracer indicator on their platform, right? And what it's essentially done is that every time we cross above or below the green or the red, so let's say we are underneath, like we're trending down for a while. One example would have been as of late, and we got a cross from, essentially this indicator is like, hey, we are, in a bearish trend, we're kind of stair stepping down. Once we get a daily candle to close above that indicator, right? Taking the long or, and vice versa, taking the short, right? And it's been a really good swing trade indicator. This has worked really, really nice. And going back and even into here, we didn't get a daily candle close below. So technically that's a dip buy, based off this indicator. And then your stop loss on this guy is essentially I throw up the smart trail. Once I'm in, I throw up the smart trail. And then you put your trailing stop loss at the bottom on the long underneath the blue. So let's say you would have entered right here, right? You're just trailing this thing up and, maybe you stopped out. If you stopped out on a wick, you stopped out here so much higher, unless you're not, taking profits into the strength, which building that into some sort of system or strategy would make sense. And in the same general idea, there's been some small fake outs, but even in these small fake outs, your stop loss wouldn't have been that far behind and it wouldn't be the end of the world. It would have been small losses for these small fake outs, for what you then would get to be, huge wins on some of these bigger moves on these swings. So it's worked pretty well. But with that said, like based off playing off that, using that a little bit to our, advantage, what you've got is essentially right now a situation where it's strong. I mean, do you want to fight that trend? I don't think I would want to fight that trend until Bitcoin gets down below. You can look at this recent higher low right here as like the true, test, which is around 21.7 or 21.6. But until it gets down below like 22.5, which is like right here now, I mean, it does look strong, and it's, I wouldn't want to be fighting the trending on that thing for right now. So it looks pretty good. It's just kind of stair stepping. I think we can get up towards maybe, 29, 30K. It's not unrealistic in my view. We'll see if we get there, but that's what I've been kind of checking out and using. On Bitcoin, it's worked decently on the from a swing trade, bigger picture approach. You know, when you get a lot of chop and a lot of short-term price action chopping around, it's not as useful. But when we have bigger period, when you look at the broader picture, it's been pretty helpful, I think. Try out some indicators. So for the 0-day strat, focus on momentum. Yeah, I think mix with some shorter terms, 20 SMA. I think a lot of people like to use the 8 or the 9 EMA, the 20 EMA as well, like the 9, the 20, I used to use the 10, back when I was looking at small caps like a long time ago, but I just I didn't really care too much for playing momentum like that. And I've been finding that the 9's been pretty good from a momentum standpoint. I think a lot of people generally respect that, or a lot of traders respect that. Not that you have to, or that necessarily matters, but that's been a good one to watch. Where's the resistance on Bitcoin, by the way? QQQ. Pull it up. We're kind of in shop zone right now. I wouldn't be surprised if we were to bounce here, but I also wouldn't be surprised if we kind of chopped around for a little bit before, some sort of direction is established. We're right up on the, go back to QQQ. We're right up on the highs of, what is this, back in November, December. Like, we're right up on that area, which is where we're kind of sitting right now. So it's kind of a spot that you look at maybe a support. We had a decent move down. What you want to see maybe is a bounce here, not get back much over 300 and then kind of go lower, which would be a setup for a move down. And if we get back over 300, that probably increases the chances of us coming back and maybe going and testing these highs again up towards 315 on QQQ. But if you want to toss that swing indicator up, let's pull it up and see how it's been working on the Qs. So we got a bullish cross, just recently on that indicator, right? And we've yet to cross back below it. How about that trailing stop? Let's put the trailing stop back up, the smart trail. If we put that up, yeah, you would still be in. Like, your entry would have been in here. So it would have been around like 279, 280. Let's just call it 280. Your trailing stop loss is now 286. So you're guaranteed money on this trade. You're guaranteed, green. And that would have been from January to now. If we drop back below this 286, 287, then you would probably get stopped out on that. So it's been looking decent. So I would say it's still strong. There's no reason to jump ship on the long idea yet, right? As crazy as it sounds to some, I would think. And then on the backside, you had a lot of chop around this thing. So I don't know if I really, it would have been small losses. Or you would have maybe still been in a trade, but it would have been small either way. A few points, honestly, up or down. Bigger picture swing perspective. Let's see how it worked. It worked decently when it crossed back below here. We got a decent move because when you cross back below here in August, you would have entered this thing short. Your stop loss goes to the top of this red or above the red. As time goes on, you come down, that stop loss moves down, down, down. You would have gotten stopped out on the trade. You would have had to wait until here. So you would have been green. You would have gotten a short from 308 down to 293-ish. But the thing is, you would have made more money than that because in reality, the way I view it is I put a 2-to-1 on that trade. So if I go and enter that and my short is immediately set to those highs, what's a 2-to-1 risk reward from here? I'm taking profits at that at a minimum, which you would have actually gotten technically down here. And as time goes on, that trailing stop comes down, down, down. So that risk reward becomes better and better and better. And so I would say on a strategy like that, you got to craft your own kind of set of parameters, right? Because you can look at it a bunch of different ways, but into these big extensions down, right, there's got to be some profits to be had, right? And then you can just have the rest of your shares or contracts, whatever it is, with a trailing stop. If we breach back above there, you get out. So I would say for those types of swings, I would go with the 3x ETFs, is play like an SQQQ or a TQQQ, and that's kind of the best way to play that idea. So I'm going to be kind of messing around with that, and I started messing around with it a little bit in the swing perspective, and to see how much it's going to work. Big picture, QQQ, S&P, Bitcoin. You can probably even play it on maybe commodities. I'm curious. Let's see how it worked. How has it worked on oil? Let's check that out. Natural gas, I'm sure it's worked pretty well with the recent move down. You would have crushed it. So here's oil's daily chart. Let's check it out. See if it worked, how well it worked. Go back, pull it up, pull up the Lux Alg. Okay, so you would have, technically speaking, you would have been long. I guess you would have been long up in here on a breach over this red zone. Stop loss would have been here. You would not have gotten stopped out until here. You would have had green there at a minimum, even if you didn't take any profits on that move up to the highs at all. So you would have been green on that trade overall. And then the backside, you would have entered a short here. Stop loss immediately goes here and starts a trail to the downside on the top of that red, and that would have crushed it. You would still technically, you would have gotten out here. You would have gotten out here back when oil crossed back over 90. So you would have had a short from 110 to 90. It's 20 bucks at a minimum, even though inside of that, you had oil come down to 76. So that could have been nuts. Like, that risk reward is insane if you look at that from that swing perspective. Let's take that. Let's look at that risk reward. So to that stop loss, 2 to 1 would have been right in here, like 85, and you would have gotten, technically speaking, down to 9. You would have gotten almost a 3 to 1 on that risk reward from that swing, which is really, really nice. You know, there's a little bit of things to, I guess, work out when it comes to the chop. And the way that I kind of view it is, like, if we get a lot of wicks and a lot of tests to that level, you know, step out. I don't take. There's no reason to take it in chop, but if there's less chop and a little more kind of fluid price action, it's a really good. It's been working well across what I've seen, so it worked good there. But yeah, but that's using Lux Algo's premium indicators. It's one of the two that we're using on that is the Smart Trail for the trailing stop loss, and then the Trend Tracer for essentially looking for entries upon momentum or trend reversals based off of a cross of that indicator on a daily candlestick close. Given that we haven't seen chop over and above that indicator, above or below in the prior, like, you know, week or two, is kind of what I would want to look for. So that's the idea. I think there should be a link below if you want to check it out, but I don't really care if you do. I mean, I've been using it. I like it. It's pretty cool. I think it speaks for itself. And also Lux Algo is like the best, I would say, when it comes to like the algo trading and the auto indicators and the AI type of deal. They're probably the best, the most well-known, best quality, best indicators, best support, like in terms of the companies out there. There's a couple out there that do that type of stuff, and they seem to be, from my understanding and research, the best. So, but then again, you know, there's more to just using, you know, indicators are cool if you can use it to make, you know, build a strategy, but also it comes down to you have to execute the strategy at the end of the day. AMD, let's see. I'm running through some of the comments. Here's AMD's daily chart. You know, let me get rid of some of these lines. Let's reset this guy. Remove all that. So AMD's daily looks decent. I'm gonna put the 50 SMA back up. Yeah, we're still above that. You put the 200 back up too. Yeah, we're above that. We're barely above that. We're probably going to get a bullish cross. If momentum can stay decent on the upside, we're probably going to get a bullish cross here on the 50 and the 200. It's still got a ways to go. It's about like $5 away. It's a bullish cross when the blue 50 moving average crosses, let's say, the 200 moving average. Like, that would be a bullish cross right there. We've gotten it up on a bunch of things. Not everywhere. We've gotten it on a bunch of things lately. So AMD, it's weak today. I mean, I guess it's still technically green, but it's weaker today. But overall, I mean, after the NVIDIA, you know, earnings, this is looking like there's some good strength here. This is a sector that's got some good strength. So if we get dip by, or we get, you know, bounces on the S&P and stuff, I would imagine the semis are going to do really well, or be one of the stronger sectors. They have been. So we're losing strength now. The bounce is losing its steam. It seems like we got, yeah, SPY's come back. IWM is weak. Dow is weak. Still green, but not that green anymore. Across the board. AI, let's see. How does she look? I don't like it, actually, to be honest. The only reason, unless I can get above this like 23 area, if AI gets above 23, then sure. But it's kind of flagging, and it's kind of got these, I guess I drew this trend line, I think, on Friday or something, but this is, it just kind of held that. So I guess it's a good sign. So that's a good sign. If it breaks down below 2150 or so, like that's kind of like the breakdown point. Under that is not looking good. It held that today. That's actually a good sign. So that's not bad. Bunch of wicks there. If it gets back above 23, then that's setting you up for moves. But the only concern is that a lot of upper wicks is, yeah, you can kind of draw this, I guess, pennant or, you know, flaggy type of setup if you want to call it that. But yeah, it's got to get above this 23 area, ideally, to see the next leg, and even that is a little sketch. The only reason why is because it kind of got, it kind of got socked in with a ton of longs like this whole way up. And I think it kind of got very hyped. So it wouldn't surprise me if this thing wanted to pull back and take a bigger breather. If it were to pull back into like, if it can't break this 23 like this week and it breaks down, to pull back into like the $18 range, like that would be a spot to maybe look at that for a base, could kind of glide around in here for a bit. And that could be the setup for maybe, long opportunity in there. We'll see though. But I could see it go. It's kind of at it's kind of at a point where like it's gonna go. It's tightening up. The range is really tightened up. It's set to go in a big direction one way or the other. And they got earnings here on March 2nd. Is that this week? That's gonna be interesting. That's I don't want to say sketchy, but like that's interesting. How this earnings plays out right here. I personally would be kind of scared if I was holding it through that. I wouldn't want to hold this through earnings, although got a bullish cross just happened right there. All that doesn't really mean much. It just means that like, hey, price action in the short term has been really strong compared to the longer term. But earnings on Thursday, it looks like. So just be careful with that, Know why you're holding it. If you're holding it long term, that's one thing. If you're holding it short term, just don't get destroyed by earnings like that, right? The 9, some good things. Yeah, the 9 EMA is a pretty good momentum one. If we look at like Tesla today, let's look at it up. Let's look at Tesla. Tesla's been strong today. Yeah, it's still. Look at Tesla's chart, by the way, guys. This chart on Tesla, has that look of okay, it held here, like low end of the range. It looks like it wants to go. So if the market isn't super weak in the coming days, like this thing could be popping 230, maybe even more. Pretty soon. It's been super strong. Volume's been pretty insane. So I wouldn't be surprised if Tesla wants to go for a run. But if you go to like the 5-minute chart, I'll pull up the 9 EMA. Here it is. It's that yellow line. I guess it didn't really work that well. It was early in the day for momentum, right? You had you got above the 9 EMA, yet you held above it, didn't break below. Once you broke below up here, you got out because you would have avoided all this chop. Okay. You got above it briefly here. I was coming out of chop. I probably wouldn't have used it, to be honest. I only would really use it if it's respecting it. So if you're watching the stock trend in a certain direction and it's respecting that level pretty nicely, then I would use it more. If you go to SPY, let's see what SPY did. Not really. Kind of respected it here once it broke below, and then it got above, held it for an hour or two. A little choppy, but you'll find it depends on the day, depends on the stock. It just really comes down to you can look at any indicator, honestly, I think, and some stocks will hold it really well one day, and it just kind of just gives you a picture of the trend. If it's holding whatever it's respecting nicely, if it continues to respect it, then great. If it breaks the respect, there could be a big move in the other direction, right? Whether it's a support line, it's a VWAP, it's the X EMA, Y EMA, Z EMA, it doesn't matter, Nat gas going down to TBN. Where's Nat gas today? It's up 5%. Look at Nat gas. It's actually up a ton. Like I think we talked about this like last couple of weeks, and we're like, we're gonna, a lot of us were looking at this and we're like, yeah, we're gonna all get stopped out. Then it's gonna go, and it was trying to build a base here. I had the suspicion of a flag idea, downside flag, and it worked out really nice. Gave you a couple day push down, 2-3 day push down, and then right back. You've now had 4 green days in a row on Nat gas, and it's at a point where no one wants to buy it. I feel like because you don't want to get caught in the next leg down, right? You're buying it. You're not buying the low, but you're buying the thing up, whatever it is, from the lows. It's up from the lows. It's up 30-ish%. So do you want to buy that, or do you, I guess you got the trend, you got the confirmation now. Great. But I think it's kind of at a point where it's sketching people out to go long. So you have this weird push and pull, and that's the whole mental manipulation kind of game that you got to play. So I think it doesn't look bad for a long, but it depends upon how you're viewing that long idea. If we let's go check out the indicator that we were looking at before. Let me get rid of all this shit on the chart. Let's get rid of all the drawings. Okay, let's check out that Lux Algo indicator again. How would it have worked? So you would be in a short right now, and if you were in it, let's see. When would you have gotten in the short? There's been some fake outs though. I guess you would have gotten short. Well, you would have gotten long here. Okay, and then you wouldn't have gotten stopped out, so you would have made money on that trade actually. So that long would have made money. Then you would have gone short here, and you would have gotten stopped out here. You would have also made money on that. Not much, but you would have made money on that, especially if you are being proactive into the downside. You would have made money. then you guess you would have technically gone long here. It would have been, recent chop. So I don't know. You guess you could have and would have gotten stopped out soon after. So it would have been 2 greens, 1 red. And then if you got short again, which would have been here, you would then be up fat. Like that would be a huge win. So it would have made up for it a lot. So DVN, let's check out the charts. I mean, that doesn't look great. Although it's bouncing. The problem I have with that is like you just broke down below some big levels over the past like year or two, or the past year. I don't know. It's got some room up. I mean, if you played it on a long, right, you're kind of bottom picking. You're almost hoping that this is going to hold. If it does, great. If not, not a great. Like the only problem is like this has got some lower highs on the bigger time frames. Not a great look. Like on the bigger picture scale. If you go to the weekly, let's go to the weekly. Yeah, I mean, this is looking until. To be honest, it's obviously you can catch the bottom maybe right here, right? And maybe you're at some support. But underneath this, you've got some volume gaps. Like you got some more downside potentially if it were to break this like 52 area. So that's kind of sketch. Not if you were to risk it, like, you have a risk of like $2 downside from here for a much more upside if this is a bottom. But just be careful, because you don't want to get caught. Same, this one's stronger. APA is stronger. I would say these are better looking higher lows almost here. Yeah, lower high just developed here in a nice little downtrend almost. But it looks better in my opinion. You also have this volume. You got a little volume gap to like 35, 34, but like you got some better volume support underneath that area. So not as big of a downside chart-wise, at least from a chart perspective, look on APA. Some sort of there definitely are volatility indicators to some degree. I just don't know what would be the most useful, right, in that scenario. End phase in range 209 and 212. Yeah, it's been nice. That's been a strong stock today too, kind of like Tesla. End phase came down, like barely filled that gap. So get rid of this box. Barely filled that gap fill to the downside, and it bounced. At this point in time, like end phase has been so strong. I don't know if I would want to be like shorting it at this point in time. I'm not shorting it, but I used it as a hedge, and it did make a few bucks because I had puts on it to hedge out when it passed like a couple weeks ago when it was super weak. It made a few bucks. I guess technically it did make a bigger move down, a slightly bigger move down, but I think I took profits at like 200, and it got to like, I guess on Friday at like 196. Kind of reminds me of the parabolic stop and reverse indicator. Yeah, I think the way that I would use that on a swing perspective would be, I think that whole Lux Algo idea, right? If we even pull it up on stocks, let's see how it would work on like a end phase. Yeah, I mean, it would have worked good. It doesn't look too shabby. I mean, technically, yeah, you could have got, there's opportunities to get chopped around. Like you would have gotten stopped on that idea, I guess. Yeah, looking back, but then you would have had this trade right here that would have been huge to the downside. So it would have worked decently. You also would have had some longs back in here on the swing side that would have paid huge. There's some kinks, I would imagine, like anything else, to be worked out in terms of how exactly you'd want to manage it. But I think it's a pretty solid idea on that trend reversal idea. SQ looking attractive below 75.40. Yeah, I mean, holding the 50 SMA until that, there was like 3 days that we couldn't break below like 70, upper 7190s or something like that. 72 roughly is like the spot to hold. So that's not a bad risk reward. It's trending up. You got higher lows. If that low is a higher low, this looks decent for sure. Resistance up into the 90 to 95 range. That's your next spot to watch, but that could be a ranger from could kind of just zigzag back up into that area for a take profit and maybe even a small hold for more. It breaks down, you get out, and if not, you play for more and you have a little more skin in the game. On a trading perspective, thanks for explaining the thought process. Yeah. Of course. Oxy has earnings today. I think so. I believe they do. I'll watch that and see, or at least I'll pay attention. Not a good look if it breaks down below 58. I have an alert there, and I have an alert above 67. So I have a put debit spread on Oxy out until next year. So essentially I'm looking at Oxy saying, hey, it broke down below this big trend line. It's trend zone, if you want to call it that. I guess your demand zone almost. And broke down below that, and oil's been weak as hell, and there's a massive disconnect between oil stocks and oil. Huge volume gap to fill back in here. Like, this could be a really good downside play. So I use it as a hedge for the portfolio for the next year. It's kind of like the time frame on it. And all that has to happen is I just need, for the max profit to hit, I just need Oxy to stay below $60 by next year. Obviously, if it goes down the near term, we could get close to max profit, but it's playing off of the decay of a little bit of time decay, and also the stock generally staying weak. It doesn't have to necessarily go down though for the trade to work. It could actually stay flat all year. It just can't go above like 65. Then I could be kind of in a tough spot. So that's the idea. It can go above 65 like soon. It just, like, by the expiration date, you just don't want it. I don't want it to be above 65. I think that's like I have a 60 by 65 or something like that. KAL bottomed yet? Let's see. That thing is, they got earnings though. Be careful with that. Earnings is, if that's accurate and that's coming out today, that's your look then. But hey, this is not a bad looking chart, because it is getting destroyed. It's gotten destroyed. So you can be looking at, after this earnings, like, maybe there's an opportunity. Yes, volume's been decent since the pump, but maybe there's an opportunity if it flushes to new lows to accumulate something and look to be selling into kind of pops. Not like a perf. I guess you have to look at the fundamentals, what the dividend, or not dividend, the market cap is 4 million, how much cash they got. Like, look at all the different fundamentals going into them, and catalysts upcoming to me more comfortable with that type of play, buying those lows. Because this is a setup that I would generally like on a small cap. Like, I don't like buying the small caps that are like up here, because the risks of offerings and whatever. Like, I want to buy them at their new lows, right? So when they're going to lows, but I see high volume and I see a high, they got a ton of cash in their balance sheet and all that stuff. Like, that's what I want to see in a perfect world, right? Appalled by nat gas. Give up. It's one of those where you gotta almost have like that reverse indicator where it's like, okay, I'm liking it, so it's time to go short. On nat gas, you start liking it long, that's when you want to go short. That's how it's kind of felt. But hey, it's kind of trading this like really weird, just extremely consistent trend down. Like, there was minimal chop in there at all from really late December through like early Feb. So from like almost a month and a half, you pretty much had like a very controlled selling on natural gas, which it seems to me like it's algorithmic really. But that's kind of the deal. I'm looking back at that TQQQ from last week that I sold the straddle on. And I think you're kind of seeing why, or TQQ. You're kind of seeing why, because today's a perfect example where, who knows what's going to happen, right? The next month, I guess we could get some better direction, CPI in a couple weeks or whatever, and whatever. But either way, you had a day like today. This is kind of in the story of this past couple weeks, is you had a day like today where, thing trades up. Let's go auto adjust this. Thing opens up, gaps up, feels like it's going to go higher, and then you get a kind of a move back down to lows, and just a chop. So those contracts, I'm essentially like right at the strangle area, or the straddle like point, the strike. I can't have them. I just can't have them sit there, because the longer they sit here, really, the worse it's just bleeding those contracts out. Theta decay, and you're getting eaten alive. Finally learning a ton more, just so many moving parts and things going on. I think that if there's got to be a way to simplify that down though, right? There's the keeping it as simple as possible would be really, I would think, important, right? Because the simpler it can be, the better on that type of strategy. So there is a lot of moving parts to it, but if you can make those moving parts not move so fast, if that makes sense, that's where I think the advantage is, or at least it keeps the ideas simple. Yeah, I had what did I have? So I had Amazon as well. Maybe it was dumb, but I was looking at Amazon on this big move down. The two trades that were stopped out were shorts. It was Microsoft. Was it Microsoft or was it Amazon? No, I think it was. Yeah, it was Amazon. Yeah, so we had this big move down on Amazon. Came down. Here's the low of the morning, the 5-minute low in the morning, and essentially I was like, okay, we're getting below that. Doesn't look too great, and we had this big wick down here, and then I had this. I put this level in right here. Essentially, this is like a spot that I was watching. If we can break down below this 93.50 or 93.45, whatever it was, I like this for a test of these lows and maybe for a continuation move down. Why? Because if you look at the big picture on this thing, right, on the 5-minute, right, we had a huge move down, right? So would you want to short at the bottom of this once we broke down below the 5-minute low earlier? Like, probably not, because it had a huge move. Like, you want to expect it to breathe, and it did. So I was like, okay, it's breathing for a bit, and we're staying weak. Like, we're making lower highs. This is like that perfect bear flag downside setup that I would like to play. We got that fake out. I entered in on that move and then just got stopped out shortly after as it reversed right back up. I guess now we're down below level now, but obviously you're not going to hold this entire way up and then all the way back down, right? You're going to get destroyed on these contracts, only to go maybe break even at best. Now, if you're not averaging down, but that's just a dumb idea to average down the whole way through the up. You got to have a stop. So my stop was really back as it got above this area right here. So it was not bad. It was a valid idea. It just didn't work. Tesla was one that I had. Here is what it was. It was this. We had all these wicks up at this 205.30 area, and we're holding the 9 EMA. Actually, I think that was what we were looking at. We're holding the 9 EMA and the VWAP, and I was okay. That's the stop losses below those levels. So put my stop loss here. I entered on this candle that popped through, stop loss below, and then boom, nice push to the upside. Hit 208. Took profits into that, and then the trailing stop loss eventually hit for a green little trade. It worked out, but not a huge move. It's just, it hasn't been. We haven't gotten any huge follow through moves, which is fine. But it's not an environment that I'm getting destroyed. At least like I had. I feel I was getting destroyed, but I was more so just super low win rate. Now my win rate's getting better. I could see a scenario if I'm dialed in and really seeing things clear, and we get some better, trender days instead of like a lot of this chop, or if I can just avoid, if I can do a better job, it's not even that. It's not like, I should be, that's like the wrong framework. I got to be thinking more like, if I can identify this shit more so that I avoid stupid stuff, if I identify that more, I can avoid some of the reds, which would take less trades, but make the win rate, substantially higher. And then we're golden. Because where I'm now is I'm playing with this and I'm getting chopped up a little bit at times. Even though things have been kind of choppy. So it's, also somewhat market conditions as well. But, and I'm like kind of doing fine, like staying afloat fine the past 2 weeks with this, keeping it as simple as possible back to simply one strategy, not playing 17 different, types of dip buys, breakouts, flags, retests, like none of that shit, just playing one setup. So we'll see how it goes the next couple of weeks. I got to give it like a month, So I'll probably give it, into the spring and see how that plays out, and then reconsider if I need to from there. ELDN looks good for a swing. Yeah, it's coming down to that level. Doesn't look too shabby. It's got volume. It's gotten some interesting little volume perks the past couple of weeks. I want to see more. I would love to see more down here, but that's not a bad level. If I already have deep in the money covered calls on Tesla, is it better to roll them a couple more weeks on green days like this or red days? If you have deep in the money covered calls, because I had one last week or 2 weeks ago in a similar situation. What I do is I wait until the end or till the expiration. So I'm waiting till, I had a covered call that expired, I believe, Feb 17th. that was like way in the money because Tesla went crazy. And I rolled it on Friday of the expiration, because the reason why I'm saying that is because when you buy it back, you're buying back. It really, honestly, I don't think it matters that much, because you're buying back the contract that you currently have, and then you're selling another one. So if it's a green day, you're paying a higher price for the one that you're buying back, and then you're also going to get paid a little bit more for the one that you're going to sell, but they kind of cancel out. So you'd have to look at it and say, like, maybe there's a small arbitrage, like there's something there, if versus a red day. On the red days, you're just going to get less money for the one that you're selling, or you're going to buy the one back that you have for cheaper, great, but you're going to get less money for the next one that you sell. So there's it doesn't really matter. That's why I like to do it on the last day, because the last day, when I buy that contract back on the expiration date, essentially like an hour before close, or you can do it just whatever that day, you are literally buying back almost only intrinsic value. So like if let's say you have a Tesla $200, let's say you have a 175 strike, right? So that 175 strike right now is going to cost, what is that right here? It's like, I don't know, $30. It's going to have $30 of value plus a little bit of extrinsic, because there's this week's volatility that's still being priced in. But let's say we get to the end of the week and Tesla's let's just call it Tesla at 207. It's at 207. You're only going to be paying, or you're only buying back essentially intrinsic value and not those extra factors that go into the options. And then you can just roll it out. That's what I would do. That's what I generally do. And sometimes it could be a little bit cheaper, than what you'd be paying. Obviously, the stock could go up this week and it could go higher. Again, I don't think it really matters, because the covered calls that you would sell to roll it out would also be higher value the higher Tesla goes, right? So, but you could get it back. I mean, I've seen people do it and just take some time. Obviously, is the scenario where you get screwed is if Tesla goes from 205 in the next couple of months to 300 plus, and you just can't catch up in terms of writing your covered calls, right? And that's where you have to then go back and do the math. Okay, which is what I did is okay, if I roll my contract out to here, how much more money would I make off the stock appreciation? And how much would I lose off of rolling that contract out potentially? You could, in a scenario where it's close to the money, you could end up making money off that. It depends upon what you're looking at. But do the math on, okay, if I roll the contract out to, let's say, the 210 strike, I'm going to make, an extra 30 or less extra, I don't know, 3K or 4K or 30K, whatever the number is. I have no idea. Whatever. And that means, I'm going to potentially, risk this happening or that happening. And it might make more sense. The scenario where you get screwed though, is this thing just goes like this. And now you're at a 175 and you only, up your strike by, 10, at a month at a time, and you're barely catching up, and the thing's just going boom, just right straight to the moon almost. That's where you get screwed. But at some point, you can just let it go, and just take the gains, or realize the missed opportunity on that, and move on to the next. Yeah, so I think overall, it doesn't really matter, I don't think, on a green or red day. I just think that it matters the timing of doing it. And so just if you're going to do it, I prefer buying back as little extrinsic value as possible if I'm going to have to buy the contract back and then roll one out. Bring out the good old chop indicator. So if you look across the large caps, here's Tesla's daily chart, right? Looks the strongest to me. Nvidia's up there. Here's Apple. No, not bad. I was checking this out. So I was using, not that I really care to use this that much, the Fibonacci's, but if you kind of go from swing low to swing high, right? What are you going to get? And what you want to generally see is you want to see the thing holding the 50% level. So, or I guess from this recent swing low to swing high. So you just don't want to see Apple. Well, I guess you'd want to see Apple hold this area, which is the midpoint, right? You don't want to see it retrace more than 50% of its move up. The log scale can throw you off. So just be careful when you're using log scale. Because I did this on a chart, I think it was Ford, and it looked so off. But I was in log scale, so it kind of threw me off. But yeah, I mean, these are still technically strong moves. I'm not one to use this that much, but I guess you can kind of use it to I can just kind of visualize it. I never really felt the need to use a fibs. But if you're looking at the Fibonacci's and you can't really see things, you're like, okay, how strong is a move? Well, go from a recent swing high to a swing low, you know, and see how much the stock has retraced off of that swing high or swing low recently, right? So we got a swing low right here to a swing high right here on the daily. Apple's retraced, you know, barely any of that. Like, not barely, but it's the 50% is right here. So it's still got, I know you can't see it. Here, let me see if I can adjust this over to the side. Let me see if I can pull this guy over. Give me this. Yes, this is now it's a little bit easier to see. So I kind of just brought that over to the side. This green right here is 50%. So this is your midline. Like you know, Apple is still holding it. It barely even got down to the 38%. So it's still holding like around 30%, which is essentially means that it's retraced 30% of the move roughly from that swing low, which is, if it can hold that, that's strong. That's showing strength and, you know, potentially the upside for now, right? If it can get back to the upside, which gives you a higher probability of that, you know, breaking through. Obviously, it's still in a downtrend, so you can't like, you know, call it a win just yet. You know, it's not over by any means, but some of these moves, it's just kind of cool to look at that and just to judge, right? Like what's going on and how, you know, like for example, Microsoft here, right? If we pull this up, let me get out a log scale just so we can kind of visualize this a little better. If I go to Mike, let's see, swing low to these January lows to the highs here, you just exactly hit 50. So Microsoft a little bit weaker than Apple. It pulled back to exactly the 50% on Friday. And it's holding above that now, but it's like, it's weaker than Apple, right, on Microsoft. Tesla, I mean, I wouldn't even bother doing that because it's so strong and it's clearly strong. NVIDIA, super strong as well on NVIDIA. AMD, not as strong as NVIDIA, so I guess you can draw that in. Let's do that. So you could even do the October lows here, but from the January, or I guess the January 6th low to the recent high a couple weeks ago, you're holding right now. You came down close to 50%. You didn't quite get there. So you're holding like, you know, 30-ish, 35%. So it's still strong, you know, overall. So that's kind of something to use maybe, and understand the pullbacks that we're getting. Yeah, I was never one that cared too much about Fibonacci's. It's not that you can make it as confusing, I feel like, as you want. Some people will live and die by them and swear by them. I don't seem to care too much. I think to be honest, from that simplified perspective, I could just visualize it. Is the thing strong or not? You know what I mean? If you're getting super wild up and down action, it's just choppy. You know, if the thing is up near the highs, it's pretty strong. If it's down near the lows, it's not strong. It's weak. Like, it's pretty easy to kind of generally, you know, get that feel. Although people who use it, I would imagine, probably use it a little more strict than that. If you're going to use it in a strategy or whatever, you want to be, I would think, a little more strict than just kind of generally, you know, talking about, you know, oh, it seems pretty strong because it's holding roughly the 50. Like, you might want to be looking at exact targets and levels and stuff like that. Friggin' super thirsty. It's hot as hell here now. Well, it's back in the 80s, which I like it, but you go out for runs and whatever, and you're dehydrating super fast, whether you realize it or not. And I tell you, I was listening to a couple podcasts, and I'm not sure if you guys have listened. I'm sure some of you probably have listened to the Huberman Lab podcast, Andrew Huberman. Pretty good when it comes to the science-based approach and stuff. But I think one of the biggest takeaways from some recent stuff was just how important hydration really is for how you feel. And I never really noticed it, but there's so many times I can look back and go, you know, why do I feel tired and why do I feel kind of shitty? And then I go piss and like, oh, it's like dark. Like, I'm dehydrated and I can clearly tell. And you don't realize, like, even just drinking a, you know, tall glass of water could make you feel like 10 times better in the moment, or, you know, short term, without needing caffeine, any of that type of stuff. But just keep it simple. I went back to the solid candles, not the hollows, just because I think it's easier to see on the streams. Not that it was, I try to keep the quality as high. I think the quality should be, you know, up to 4K or something like, or close to it, if you turn like the settings up all the way. should be pretty high quality, but the hollow candles here, they could be tough to see the greens, you know? So, and the reds, I guess the red hollows too. Doesn't really matter. I don't think it's a huge deal. It's a similar situation. So SPY came down, bounced. I also had a short on MES today on the futures account. It was a loss. And it was the same general gist, right? Look at this. It was like, you can tell me this makes sense or not. I look back, I'm like, I'm not disappointed with the idea. It was a short as we broke down below, or as we're breaking down into this area right here. So I literally bought or shorted the absolute bottom, like absolute bottom. The reason why I took that play was because we had been trending below this 9 EMA, right? We've been weak, came down to this spot, bounced back up, held the 9 EMA. If we broke back up the 9 EMA and did this, like I wouldn't be not interested, right? But we stayed weak, okay? Stayed tight to the 9 EMA and stayed tight to those lows, which indicates to me a higher probability that we're going to break down if we keep testing those lows. But again, what happened this week, what happened again, I guess kind of going off the same back of last week, was we got a new low of the day, right? Nipped a new low of the day, and immediately reversed. Could have waited a second, I guess. The problem is on those types of situations, the longer you wait, if it goes your way, you could be down here, right? The price action can take you down here, and then you don't want to get in down here. You want to be getting in closer to that break point if that's the strategy you're playing off of, right? So just didn't work very well. Market just closed. The S&P finishes the day up 0.34%. Nothing insane. If you go back, I'll go to the 15-minute chart and show you how it looks, right? So we had the big gap up overnight from Friday into Monday. And then you pretty much pushed, and then you gave a lot of that back. You almost filled the gap back down briefly, and then, you can, which I guess is not bad. In a perfect world, what I would have liked to have seen would be, fill the gap down early and then finish stronger. But if you want to be, that's in a perfect world, I guess. But yeah, back to that 5-minute chart trade, right? The idea here is simple. Once it no longer respects that 9 EMA, get out. So I got out here. It wasn't a bad loss. It was a pretty small loss because in a perfect world, right, a 2-to-1 risk reward ratio from the entry point, right, to that stop point, puts you at a target of here, which we ended up getting range down to that level by the end of the day. It just didn't tell me that that's unrealistic, right? We got, obviously range up, and then we went from all the way up here, all the way back down to here. So it's not an unrealistic expectation, right, on that trade. And ideally, if we get a big push down into this zone, you take one of the contracts off, take half your contracts off, whatever. Or if you had, futures contracts, take half off, right, into a big push. And then you can put a trailing stop loss on the other half, or whatever, 2/3 or whatever. But again, the choppiness kind of continues. And you didn't really see as much in Tesla today. It was a little bit better, but there, depends upon the timing of it. Generally just a trender to the upside all day. So it depends, I guess, where you look. I've been finding that you get a little bit better price action maybe in the individual stocks sometimes, especially in this environment. But, it's give and take. A lot of Forex people like Fibonacci's. Okay. I think a lot of people who trade Forex, here's another thought too, right? I think about this a lot lately. I think we're all conditioned because a lot of people invest in the markets like longer term as well. But you're conditioned to kind of look at things and go, like, if I pull up a chart of like SPY, right? Whether I find myself doing it all the time, subconsciously, it just happens. And I'm like, okay, well, this would tell me to go short because, we broke the trend line, right? For example. And I think to myself, well, if we go short, that means we might go to new lows. Do I think we're going to go to new lows? That makes sense. I'm like, what the fuck am I doing? Why am I thinking like that? If you're talking about a trade, right? You just trade the freaking chart. Don't trade the thoughts in your head, right? Because you're going to contradict yourself. But that's why I think when you look at Forex, it's so much easier to not give a literal shit about what you're trading, because you have, honestly, what does this even mean? I feel like people don't understand that as well. So you're trading currency pairs and whatever, and you're like, I don't freaking know what this means. I'm trading gold. I don't have any gold. What do I care about gold's price and, versus the US dollar? So those things are almost easier to remove yourself from what you think is going to happen and just trade the chart only, because that's all that matters. But I think a lot of people get caught up in that, especially when looking at SPY, looking at individual stocks in the stock market, because they're like, well, if I'm taking a short on Tesla here, well, because my, whatever signal or my system says that it's time to go short because the chart says that, that means that my investment in Tesla is going to go down. Do I think that's going to happen? I invested in Tesla because I think it's a fundamentally strong company. So you start going back and forth. That's just like the worst scenario to have. And that's what I think a lot of people subconsciously struggle with all the time. I do it all the time. I've gotten way better at it, but I do that all the time. And that's not trading. That's just kind of hoping and praying or whatever. That's playing off of your emotions or your ideas, or, it's not, you're trying to trade off of an investment strategy, which is not the same time horizons. Like, you can't compare the two. So if you can disconnect that, you're good. It's, much better to be like that, but it's not as easy as you think to disconnect that. Overhydrated, really bad headache and dizzy. I think I've done that to myself. I don't know if I would call it overhydrated, but I've done it to myself where I drink a ton of water, go to the gym, and then I just like get nauseous. I can't work out because I just got so much water. I don't know whatever it is, but I've had that problem happen to me. Got to be robotic about it. Yeah, I mean, that's why I think people who trade Forex, you might hear that, and I think a lot of people hear that and get turned off, like that's a scam. Like, no, it's not a scam, dude. Like, if you know what you're doing, it's just trading charts. You're not trading what you think is going to happen in the Fed. You give a fuck about the Fed. Like, who cares? I mean, that obviously will move markets, right? That news moves almost everything, but you don't care about the day-to-day of the Fed and all that stuff and financial news. Like, you're just trading the charts. You're not looking at that stuff. So, like, seriously, it sounds like kind of weird, but like it's just simpler, I think. So here's the current probabilities for the next Fed meeting, as we're talking about the Fed there. 75% chance that we're going to get a 25 hike, and it looks like I think that's kind of been I think my consensus view has been that, and I think that a lot of people would probably agree at this point in time, the way that the Fed has gone about things, unless we get some high, inflation data in March, some really high numbers that are scary, they probably are going to want to push for a 25. And it's not about 25.50. It's about how many 25s, because they could just do 5 more 25s, or they can do 2 more 25s. You know what I mean? At this point in time, just so that they can kind of ease into what they know will be, probably substantial lagging effects of these rate hikes. And I think we're going to see more of that as time goes on this year. That's going to get more and more clear how bad and how well the economy can handle it. Right now, a lot of people believe the economy can handle it pretty well. And that, I think I saw JP Morgan or Morgan Stanley, I forget who it was today, predicts that we're not going to see any cuts of the Fed funds until March 2024. So over a year from now until any cuts. I think that makes sense given the situation right now. I think that's fair enough. But that's saying that, like, that's them coming out. And I think it's absolutely idiotic in my view. Again, but who am I? I'm a dumbass too. You have no idea. You have absolutely no idea what's going to happen this year. No one does. I mean, the way rates rose at such an unprecedented level, right? You can't go back in history and say, oh yeah, well, we've actually had so many times where the economy was able to handle it just fine. It was no big deal. And, we were fine. And the Fed kept rates higher and then slowly cut rates by 25 basis points, years down the road. We don't have a scenario that looks super similar at all. So my view of that is like, I think that is just horseshit news that I think should be it shouldn't even be said, but it is. That's the type of stuff that gets said. And that's a consensus right now, but you get 2 low inflation months in a row, and the freaking exact opposite is going to happen, right? You get couple jobs reports in a row that are a little concerning, which literally can happen at any point this year to completely flip the script on that. So you just can't, I don't think you can make that you can't make that estimation, but if you're going to trade off of that, I think that's idiotic, but I guess you can have your thesis or your speculation. That's one thing. And then, what actually happens is going to be a whole other, I think. Saunas really help your general health. Yeah, you know, I haven't done that enough, but I want to do more of that. Problem is, like, I just kind of have this. I've been messing around with the timing of going to the gym, and I started going now in the morning. When I lift, I go in the morning at like 6 a.m. I leave at like 6 a.m. and go, and it makes sense. I just got to figure out the timing of being, I guess, getting home and, you know, and stuff. I get home generally like 7:30, so it's not a big deal, but I guess a little 20-minute sauna or 10-minute, even 15-minute sauna run in there, because they have a sauna, so I should use it. I feel like I should use it. And I don't know if anyone uses it in the morning that early, but I think a shower after that, ideally, because you know, you can't really sit like soaked. The amount of laundry that you'd have to do, not that in a gross way, but if I use a pair of shorts like one day and I don't really sweat, like I'll use that pair of shorts like another time in the week and just, you know, wash them later on. If I sweat and run and get soaked, like, yeah, I'm not going to use those shorts again. I'm going to wash them. But if you're getting the sauna, I guess, you know, you're going to be doing a lot more laundry, I would think, and underwear and all that stuff. Then you're going to want to shower right away when you get home. Then here in Texas, like, let's say you do it in the morning, hit the sauna in the morning at 7 a.m., then you have an entire day where it's like 100 degrees. You're going to sweat through your next layer of clothes, and you're going to have to, you're going to do like two rounds of clothes and all that each day or whatever. So if you don't mind the laundry, I guess it's fine. All right. With that said, let's see. Tomorrow we got advanced trade. Nothing insane. I mean, really nothing insane. Consumer confidence will be kind of cool to see. Chicago Fed speaker is coming at 2:30 a.m. What the 2:30 a.m. I feel like that was supposed to be p.m. It may be a mistake. That seems a little weird, unless he's in a different country. But just wash your shorts and tea in the shower. Yes, that's tomorrow's. Tomorrow there's that, and I think jobless claims. Nothing great. This is not a big news week. Next week, no, to be honest, I mean, unemployment rate. But to be honest, next week, the next 2 weeks are pretty chill for news. Like, there's not that much news, so we might chop around. I wouldn't be surprised. We just chop around. Here's SPY's chart though over the past like couple of days. I mean, here you can almost draw in. You know, I'm gonna go back. You can almost draw in like the megaphone, right? Where we have like a higher range up and then this range down. It's like super choppy, man. It's like really since the 21st, 22nd, just like the range has gotten, you know, wider. But with that said, we'll wrap it up. Tomorrow, what's tomorrow? Tomorrow's Tuesday. Yeah, I'll try to do a live Wednesday, Friday at least, maybe more if I can get to it. Tomorrow/Thursday. But because I feel like I want to make up for the lost time for next week, because there'll be like essentially I will be no live streams next week because I will not be home. But thanks so much for watching, guys. I will see you in the next video. Thumbs up button on the way out, and enjoy your